If you add massive leverage, you can make major gains and you can make a lot of money. Let me go through it. So here we are at Jup.ag, and I'll be honest, stay to the end of this video. I have clickbaited you in a little bit. So what is longing, what is shorting, and what is leverage? Longing, very simply, is when you think the price is going to go up, and so you're making a bet that the price will go up. Shorting is the opposite. You think the price will go down, so you're betting the price will go down. Now, we can do this normally, right? We can go and just buy Sol now to long it. And then what we can do is we can sell it later on. When we sell it later on, we realize that profit. That's essentially longing it, but that's doing it via a spot market. Now, if we short, it's done a little bit differently. As an example, we may borrow Solana. We have USDC as collateral. We give that to an exchange or a platform. We then borrow the Sol. We immediately market sell it. We pay some sort of borrow fee on that. And then when the price goes down lower, we will essentially buy it back at a cheaper price, give it back to the person that we borrowed it from, which in this case is a DApp. We pay a little bit of a borrow rate and some fees, and then we walk away with profit. Now, when we use leverage, we're using something called perpetual trading, a perps DEX. So when we go and short it, we're essentially saying that at not 100x, but let's say something like a 10x, we're going to put in, let's say like one Sol. We don't have one Sol, but we put in one Sol, and then we are using 10 times that value of Solana to bet that the price, in this case, is going up. That's what longing is. We are saying it's going to go up, and if it goes up 1%, we're actually going to get a 10% increase in value. However, if it starts to go down, if it goes down 1%, we lose 10% of the value. And if it goes down 10%, then 10 times 10, of course, that equals 100, which means we would lose the entire one Sol. So of course, with everything in crypto, with everything in finance, people using leverage in order to get more of the asset. They want to outperform the traditional market by just buying spot and then selling in the future if they want to. Now, it's fantastic that we have all of these tools available, but just keep in mind that you need to learn how to use leverage, and you don't want to degen with anything too big until you've learned what to do. So if we start to increase the slider, we can go all the way up to 100x, which is lots of fun if suddenly something goes up really fast, but it's not fun if we put on a long and all of a sudden it just rockets down. Then we can lose a lot of money very quickly. So let's put on some leverage so I can show you what it looks like. What I'm actually going to show you is you can make a lot of money, but most of the time you will lose because leverage is very risky. I want to show you a couple of examples. I imagine we're going to lose money when we're going to do this basically live. However, I want you to see it so you can decide if it's something for you. So Jup.ag, I'm going to go to perps, and from here, we'll go ahead and we'll connect our Phantom wallet today. You can use whatever wallet you like. Phantom, Solflare, Backpack, they're the main big ones on Solana. And then what I'm going to do is I'm going to go and buy maybe some Sol or even wrapped BTC. I'm going to buy some, but I'm going to leverage up. So what we can do here, we've covered this in another video. Now I'm going to go with $15 of USDC, and you can see we can go and long 100x, which means if this goes up 1%, we double our money. If it goes down 1%, we lose all of our money. I just want to show you how risky this is. So we're going to long this, and it's very likely we're going to lose. Now 100x leverage is something that most people won't play with, of course. You might want to go with 20 or 50, but even still, huge amount of risk. If you look at the markets, just in general, you can see, you think, okay, I'm doing well, I've shorted it. And then within moments, you could be back above your price if you don't close it out. So as an example, the price has gone up slightly. So we've made a small amount of money. However, just opening the position means we're currently down. So we're going to let this ride for a little bit and we'll see how it goes. We can do the same thing over with Drift, and there's plenty of other places out there. The other thing to keep in mind, and people may not be aware of this, but it's something called a funding rate. It's not completely true with Jupiter Perps DEX because I use a borrow rate, but a funding rate is where you basically pay one side. So let me show you as an example with, let's have a look and see if we can find a token that's maybe a little bit more hyped right now. Maybe some ETH, not quite there. BTC, nothing there. What I'm looking at is I'm looking at this value over here. Doge, that's pretty high. That's 32%, but I want to show you one more. Maybe Bonk. This could show us something decent. All right, so here's an example. So right now, this is minus. If we have a look at it for every 24 hours, this is the amount that is being paid. When it's minus or negative, it means the shorts pay the longs. And this is very rare. Normally, it is positive in a bull market. So right now, this is due to various things, but basically, if you start to short bonk, you have to pay a little bit, which is currently 8.6% per year, and it goes up and down. You have to pay that to the people that are longing it. This is a strategy that we can cover in another video, but sometimes like this, you may want to long just a little bit and you'll earn that APR. However, most of the time you're going to see a positive funding rate, which means the longs pay the shorts. So if you want to long this, you need to outperform what this funding rate is. It's currently 7%, but quite often it will be above 20 or even 50%. Another option that you may want to do is do something very degenerate like SolCasino. So I'm going to show you this now. We're going to go ahead. We're going to deposit some USDC. Just keep in mind this is not available with all countries. I'm going to go with my Web3 wallet here and just do like $15 just so I can show you. We'll deposit and we'll confirm and we'll see that in our wallet very shortly. There it is. So let's say we think the price of Bitcoin is going to go down at this stage. We can go and sell short like what we just did. We can set different things such as taking profits and stop losses. But let's go and do $10 and we're going to go and do wild amount, literally 1000x. No, it's going up now. We're going to buy long, but you can see how fast it changes. So we're longing right now. It's going up, down. It's now going down again. And this is what I want to point out, that leverage is extremely risky. Most good traders will not go over anything more than like 3 to 5x leverage, and they will use stop losses and take profits. Okay, so that long should have been a short, and you can see we've instantly been liquidated. Now we're going up again. Let's try $3, buy long at 1000x, which means if it goes up a little bit, we can cash out. Down here, we can see the profit and loss is 2 cents, 0 cents, minus 16 cents. This is what it's like when you do leverage. It's very addictive, but I want you to learn from this mistake that most of the time you'll be absolutely liquidated very quickly, and a lot of people will turn a large amount of money, like $20,000, into nothing. Now you can see we're up 13 cents, but we're already down $10 from just before. We'll let this sit for a little bit, and we'll probably come back, and we'll likely see that both positions are potentially liquidated. Now we'll come back to the Jups Perps DEX. Here it says we're up $2, but when you factor in fees, we're basically up 10 cents. So if we go and close now, because this is all done on chain, there's a little bit of delay. We'll go and confirm. We put in $15 and we'll see what we actually get back. We need to confirm this. The position has been closed. And if you have a look, we got some wrapped BTC back. This is all of our wrapped BTC. We put in $15. We were up with the position. And when we factored in fees, we didn't even make back what we put in. Now we'll come back over to SolCasino. Nothing's happening. It's just going in a range. We haven't been liquidated. If we want to, we can go and cash out. But remember, we already lost $10 and nothing's happened. So we can cash out here as well if we want to. So that's a little guide on how leverage works. You can use it if you want, but just keep in mind that most people will lose when it comes to leverage. Learn it well, but only risk what you're willing to lose.